Greetings, market rebels. Welcome to this week's macro measure combined with the sector situation video. It's Friday, June 6th, 2025, and it is just after the bell. It's about 4:04 p.m. here on the East Coast. I'm Wayne. Here is the trusty Market Rebellion disclaimer. And then here is the trusty intellectual property rights notice from Market Rebellion. I'm going to flash last week's screen, leave that up there. I think this is last week's. Get my laser pointer going. Kind of feel like I might have had something out of order again, but no, maybe not. You know what it was? I highlighted this, and then something happened with all my highlights, and we're kind of back to the slide from last week, unaltered, I think. Actually, that is what happened. Anyway, just to take one step back, this is completely, at this point, completely quick and dirty again, practically real time, very little review time other than what I saw. Just a crazy ending to the week for me, for a variety of different reasons, and still not over. So I'm just going to do the best I can to try to help out a little bit. I hope it doesn't waste your time, frankly. But I'm just trying to do the best I can under tricky circumstances. Anyway, let's see. There's a few things I wanted to mention. I think it was really this. I think it was these arrows were the main thing, all right? Just kind of highlighting that I just believe that this underweighting and the doubt, and part of that, I don't know if I've mentioned it, but a part of that is the technical doubt because there's been so many gaps higher that have been sketchy, kind of like out of nowhere on BS news that didn't even really matter in the end, and yet the market hasn't backed off. And I think that's one of your telling signs. But just wanted to mention that. What else did I want to mention? Oh, yeah, the path of least resistance remaining up. And I think that's just it. I mean, I don't think I don't want to underthink it, but I also don't want to overthink it. And I just keep coming back to that. And you're back to a 21 point something S&P valuation, forward PE, whatnot, that kind of thing. It's over the historical norm. You're essentially right. You're elevated again. Rates really haven't come down. The Fed seems to be at odds. Trade issues are everywhere, creating uncertainty. Doesn't matter. Seems like everyone's looking past that. There was some pretty ugly economic news. There's now slightly better economic news, but then there's these tape bombs that hit. The latest one, of course, being the Musk uh, Trump dust up that happened, which ruined the trade for me. But luckily I was disciplined and got out of a lot of good stuff and just had one little thing hanging on, and that got blown up instantly. But it was a very small trade, fortunately for me. But yeah, it was I was busy doing other things and looking at paper, whatever. And boy, I'm like, wow, what's going on here? Before I could even finish the idea I was working on, the update, my stock went from breakout to right back from whence it came. So I was like, oh damn. Anyway, you know how that is. We all do at this point. Anyway, that is the main thing. I think it was just, yeah, on balance, we have to remain objectively bullish. And then this was it too, that yes, the short term charts being what they were, we said they fixed that. There's yet to be a bust out. And this week we got the bust out attempt, but we'll now get into that. It wasn't that impressive, and then it was really saved in the end again, right? And this continues to happen. I think that's another reason why this market is not very well liked, and that perversely helps out, right, to keep it bid because a lot of people are waiting, or want to fight against it, and they're like, "This is ridiculous," and it just adds to it. And the deeper pockets that want to move things back up, at least for now, they keep winning and creating more pain, and so we get that cycle. And that's why you always have to go back to it. Doesn't have to make sense because maybe it makes sense another way. You've all heard that, or some of you've heard that before, unless you're new. Anyway, let's just cover this week's title. And it stands for really cups, handles, plus head and shoulders. And essentially, those are inverted head and shoulders and risk on. So I'm seeing signs. I mentioned this in cocktail hour. I'm seeing some signs that we're getting back to a risk on environment. So I'm going to leave this up just for another moment if you want to take a screen cap or something and put it off to the side on another monitor. And then I'm going to try to go through these, but put the charts up and maybe come back to them so we get right into things. But these inverted head and shoulders, these cup and handles in some cases, sometimes you got both, take your pick. These things are just popping up all over the market. So on that note, I'm going to just stop the share and we're going to reposition things so they're out of our way. And we're going to come back to a different screen where the charts are. And we'll start with now I'm on, it switches all of my monitors to different numbers. I'm not sure exactly why. This is the basic chart we use. And if you all are kind enough to recall, we came into last week really looking at the MAG 7, 8, whatever you want to call it. We had everything queued up, and we said, right here is last Friday, and that's where we ended. And here is Monday. Our take on it was that some of the charts within the Mag 7 were looking pretty good, and that was setting up to possibly go for a breakout, which I think it did. But that's where the real trouble unfolded. If you could see from Friday, you were at closed at 3374-ish, and you were up to, let's see, 3483. So not a small little rally there, even though it doesn't look like much on this chart. And of course, Thinkorswim's already been kind enough to switch over to uh, percentages, which I don't want. But it keeps doing this to me. I don't know why it keeps haunting me that way. But then that dust up again occurred. You really had trouble with Tesla sliding big. And that was really what undid what was a nice rally that was unfolding in these bigger names. And they were, I think, helping to carry the Qs and the SPY higher, right? So if we look at Q, since I mentioned them first, they were also doing well and breaking out. That was what we were waiting for after the consolidation, if there was no news that really upset the apple cart. And it really did start working out kind of like the way we drew it up until then. And that's why I keep that reminder in there about being diligent, right? You've got to be diligent because if you get these nice pops, this kind of thing can happen in this kind of an administration. And so, it's one thing to give profits back after you've rolled, trimmed a little bit, rolled maybe once or twice. That still isn't fun. But sitting there during this kind of a situation, letting everything ride at all times and then getting a real setback. I mean, that's the other point I wanted to make, excuse me. The Qs were barely up for the week at that point on Thursday's low. So all this decent work you saw Monday through Wednesday was really quickly undone. And it did get supported by the rising 10 SMA there in white. The red 15 was right below it. And then, of course, today's little futures move really saved the week. So that's what I mean where I say it's sloppy, it's kind of messy. It's one of my bullet points this week. It's really not been pretty action, right? Like pretty action is something like we saw before where you just kind of get this really, yeah, you're going to have your openings, this and that, but you kind of just move up, move up, move up, right? Without a lot of this sort of back and forth. It's really news ticker driven, and that's what makes it hard. I think that's what makes it hard. So I've been trying to just go for singles and doubles, and rolling more quickly. And I've been glad every time I've done it. The last few weeks, because it saved me from, on my final roll, I've been giving back some, and that's the way you want to do it. If you get a lot of rolls in, that's still a really good thing. But I didn't get reset all the way back right after having this really nice little pop. But I mean, the spiders are very similar. We'll see that, right? So we got the spies. It's a very similar situation, but you can see the breakout happened there. We were waiting for this to happen, if news allowed, and it did. There wasn't really any bad news. It was on its way. It did finish well, and so that's why I've got to say it's really hard right after a rest that we thought was maybe going to be something, that was kind of like a nice little recovery for the market. Let it churn for a couple of weeks there, consolidate, hold most of the gains, and then stay above your rising SMAs. Everything was working out fairly well until the dust up between those two, excuse me. And some people are speculating that it's a contrived thing, right? It's essentially a psyop. I don't know. I mean, I think the jury's still out. With those two personalities, right? I could I can practically believe anything. That's not meant to be a negative or positive comment. I'm just trying to be objective and saying with those two personalities, I can see that dust up being one or the other. But whatever, it happened. It's now part of history. I guess we wait and see where it goes from here. And on that note, we have to now take a look at other factors, right? Because we kind of wrap things up. But yeah, everything kind of lifted. Let me get rid of the diamonds first, actually. And then you could see that the diamonds actually did quite well as well. So we've been saying I think for quite a while, since not right at the lows, but just somewhat after the lows, maybe a couple of weeks after the lows when they had to put in a higher low in the markets. It might have been sort of back in here that, hey, things are really starting to, shake out. We have to continue to acknowledge that the long-term trend was never broken. The intermediate term trend is trying to fix itself. Still, short-term trends are looking better. Intermediate fixed itself, right? Everything was looking good. Only thing we were concerned about here was I think here was the short-term trend, and then they could quickly fix that, right? So everything's been back onto, well, overall, objectively, things look good on the charts. Things look good on the charts. And so no news means we probably go higher. Path of least resistance up. All these cliches I've been using to say, right, that objectively this thing's probably they're going to probably try to keep moving this up. And they did, right? And that's what they typically do, right? Especially when you get into earnings. And if the earnings aren't awful, you get these rallies and they build a lot of maybe overbuild like a lot of air into these things. People see that, people get frustrated, people start shorting it, or they refuse to buy it, and then that just aids the whole process that way in terms of getting these bigger players that need to add in deeper trouble because the higher the market moves, the more trouble they're in. Right. And then you get sort of this panic. And I think you might be on the edge of a melt up again. I didn't really put it in the notes, but I did mention it in some UOA Pro ideas this week because I do see that. I see the rinky dink, I call them the rinky dink names. I see those names hitting. We've had some really nice little kind of left behind stocks, some squeeze names and things like that. We've had those, and some of them have worked out fairly well. And there's been more paper than I can even put in those, and that usually happens before a melt up or when they've taken the good times too far. People start getting over their skis, and now you're going to get yourself a pullback. So I know that might not help, but that's part of the notes this week is that that's really what happens though. So it's just market behavior I've noticed that happens right before you get, and sometimes these players win, right, where they're speculating in some names, and then sometimes they have real trouble and it never materializes. And that's again, it always comes back to your discipline. So one we had that did work is this N power. I put this in UOA Essential this week. It's not included a little bit of the short data. It's not a name that I would typically include. It's one I would put in for pros because they're more accustomed to knowing what a short squeeze is, being able to look at some of the short data, their experience. They know how to like what options to choose or to go with equity or how to roll up, right? Because these short squeezes can be short-lived. But this is the kind of name I'm referring to. I'm trying to think of what was the other one? Was it PHAT? Here's another one that I put in just an update out on, not a new idea. But I just wanted to let people know, right, that this was going on and this is indicative. This update supported all the other sort of low dollar squeeze names that we've been looking at recently. And I wanted to let everyone know what kind of behavior was unfolding here. And you can see this massive volume spike. Right, so this thing closed up 90%, but it was still off a full $3 from the high, just to give you an idea. So this is the kind of stuff that we're seeing. I'm trying to think of some of the other ones that we had that were lower dollar that just did this week, and that was another one applied. I don't remember if that went out to our UOA Essential people as well, but we certainly, I believe, had this in UOA Pro, and you can see, right, this is kind of like a low dollar name, but you can see what just suddenly transpired. The UOA hit, fortunately saw some interesting information on it, got it into the hands of subscribers. But this type of action works best in a frothy market. And that doesn't mean frothy as in we immediately go down. It means frothy. This can persist for a while. You can get a melt up it reaches a fever pitch, and of course, at that point, it's late, you're late to the party. But we don't, it's hard to always say when that occurs. But this is what I'm trying to point out. Just like with the cup and handles this week that are showing up in so many places. And I think IWM is what I want to go back to. And it did have a really good week. And there's better, let's say, visual examples of this right now. But if you just watch me sort of trace things out, this sort of has an inverted head and shoulders in it. And this has had different patterns at times. I've harped on how much potential he has is here at times. We were hoping it would break up above 245 at one point. It would not. That's because I think the economy's been sort of zombified for so long and just going back and back and back. And that's why this is so far removed from the all-time highs. Because Main Street, let's say, represented here, is just lagging so far behind uh, essentially the fat cats, right, that write the legislation and so on and so forth, that are part of DARPA and all the rest of it. A lot of you know the drill. But yeah, you get all that, and those big players are in on the ground floor, we could say, and they benefit greatly from the kind of um, oligarchical machinations that happen these days, or maybe are easier to see these days, and they're running away like gangbusters from Main Street. But the fact is, right, that we're seeing better action here. The reason I'm really bringing it up, not only is there maybe a trading opportunity, we have a bull and bear in here. I've got to tell folks at this point, though, that bears have been very hard to come by. I mean, I like to try to keep our log balanced, but for weeks and weeks and weeks in UOA Pro, I've had to just, it's almost, I don't even, it's probably running higher than 9-1 would be my ballpark off the top of my head. I'm sorry, bull to bear, because there's just no bearish activity. It's all, if it's bearish, it's a hedge. In fact, we saw some big put hits in IWM, and I've noticed that when that player that likes to use puts adjusts their put holdings, they're often doing that because they're gearing up for with long equity. That's just the nature of the beast. So this thing looks like it's breaking out and wants to go attack the 200. And so I think things look really good in here. The charts have really improved in here, and they're not perfect, but they're looking better and better. And this is really, to me, indicative of risk on, which is so I just wanted to cover that this type of pattern is there. There's cup and handles as well. I don't think I have to show that to, I think a lot of you know what that is, and it's easily referenced. So don't worry about that. But yeah, this is looking better and better. If we go to a little bit of a bigger picture view, we can see, right, that this is on the cusp of breaking out. I should have pre-drawn this, but again, I'm under the gun, so to speak. I mean, that to me is a thing of beauty right there. So you gotta be ready for that right there. That to me is a thing of beauty where it's breaking out through this resistance line. All you have to really do now is get through the 50-week moving average, and you can start to move up significantly. And so that's a very good sign for the markets. In my mind, there's a little bit more work to be done, and I think really you get above 220, and this is going to start looking really good. So that's one risk on factor. Another one is Bitcoin crypto, right? And so oops, that's weekly. I wanted to look at daily. So this is not quite there, but this could be one of those kind of clear out dips where, right, a lot of people were expecting this to go. It was getting all the hype. It was getting, the fever pitch of online sentiment, and then of course they pull the rug, and it's been down for a week and a half to 2 weeks. But they did flush out probably a lot of players at this point with that plunge yesterday. Now they reversed it. So I think this is why you've got to keep it on your radar that this is a very sharp 2-day reversal. And you can see that it's very close to breaking out. So I would just say, look, what's the highest SMA in the short term, since they're all so bunched? Appears to be the 15 SMA at 106,420. That's probably not a perfect level. Probably the most important level right now is 107,495 to take out that high. If you want to get aggressive, use the 15. If you want to be a little bit more conservative, let's see if we can get a close above that high. Or if you like to trade aggressively, don't even wait for the close. Just go with it and manage it. But to me, right, this is not there yet. It just, if it does reverse enough, it's really going to be interesting at that point. And I see things happening in other names like Riot, for example. This to me, we have an idea on in here. This thing is very close to, I have a small position in here right now because I took it before the end, right before the end of the day, just because I saw paper. I see what's going on in crypto and things are on the cusp. And my problem is that I have to trade at inopportune times because I can't focus. I have too many other responsibilities. So I have to do what I have to do around it. And that's why I don't carry a lot of positions and I just tinker compared to, my career. I just tinker compared to what I used to do because I can't do it all. It wouldn't be fair. I'd spend so much time watching for best exits and all this stuff for myself that undoubtedly would miss something or whatnot. So I prioritize it that way. But anyway, that's the whole point is that this is shaping up. It's not there yet. I probably went into this a little earlier than I would prefer. But again, I don't have that luxury. I've got to sometimes do my own trigger jumping. So it is what it is, and I live with it. So coin again not there, but this could all turn very quickly. I mean, it's with that reversal that we saw that could happen. Ryan flashed some of these. We have a clean spark idea. We have a hut idea, and these things looked really good. So I just wanted to kind of note that these things are looking good on the charts, and I'm thinking between that and Bitcoin. I'm sorry, that and IWM. Here's my cup and handle that I couldn't think of, and that's God helping me right there because I just could not think of the really good kind of clean example of one. But the hut is it. And I had a recent idea on hut. I think we had one before and it popped, and I think it expired, but they came back for more. So I think I either updated it or added a new one. I can't even remember. Again, my head's spinning, and I'm doing the best I can as of right now. But yeah, this is on the cusp of taking this 150 out, which is that rust colored line, and then that could go. So that's what I wanted to note. Also, we had another one this week, which was CoreWeave, and this I think was very early in the week, and I forget where it came in. Let's just say it was Monday at some point. I added a vertical in here, and it just blew right through the vertical short strike, the high strike. So whatever that vertical was, it was well above the short strike. That's how far in the money it went. From there it is Mondays right there. That's how far, far in the money this vertical went in just a few days. And so this is obviously a newer name. I think this is the in total history of the price action of the charting history, in other words. And so when they're coming in for these newer names that have already made runs, again, that's just people putting more and more money and chasing stocks. So I could go through it. I think on maybe Tuesday, I think I want to say I put in maybe like 19 new bullish trades because and the service is only designed really to deliver, I think, around 10 trades per week, but that it hardly ever happens because there's so much interesting activity. I don't even remember a week where we didn't have at least 15, and that might even be during the holidays, but really 20 is usually right around the floor, and normally, but we had 1 week's worth, the floor of a typical slow week almost in one day. I think 17 or 19 new ideas because that's how ferocious the paper was hitting. And there were a lot of, I thought, interesting things developing. The breakout we talked about last week was unfolding, and we had the paper, we had short data, we had the market working. We had aggressive UOA. Really, I think overall very good looking charts as you would expect with the way the market's been acting. So yeah, I mean, it was just that it was all there. So I'm a believer in when it's all there, like you've got to go with it because it's not always there. In fact, the prior couple of weeks, because of the consolidation, was pretty crappy trading, frankly. I mean, just we had some, of course, we always have some really good movers. That's just the nature of the beast. But you're always going to get something good, or almost always, I should say. There's going to be at least a handful of things that do really well. But a lot of them were just duds that didn't even try to go through our trigger level. That's what I'm getting at. It was just very, very frustrating because, for me, like Ryan probably doesn't mind it as much because he's dealing with premium collection, at least in some of our services where he focuses on that more. And we run, opinions by each other about certain things, but he focuses on that more and I focus on this more. And I'm more about, trying to find the momentum. Which, speaking of which, that was fortunate because we did have this in Rebel Pit Pro and I think Rebel Pit Elite that we had Microsoft as a breakout candidate. I think I may have talked about it last week. I can't remember, but I thought it looked really good. It took a little while. They were really kind of keeping you patient, but it finally, towards the latter half of the week, it finally delivered. So that was another one. We had Pan W. So a lot of these stocks that we were looking at, they really delivered this week. So that breakout we were alluding to is what I'm getting at. There was good participation. We should now cover that with the quick market breadth screen that we look at. And I'll just highlight a couple things. And you could see that we're going to look here these are stocks above their SMAs and right, all that uptick. So there's more stocks above their 50, more above the 100, more above the 200 at the end of the week. Now, they didn't all finish at the high of the week, but things were looking a little bit um, gloomy there on Thursday, where it was kind of another lackluster week. But what I'm saying is, look at the save today. So they really did. They really did. It's visually I'm getting at, not the actual number jump, just the visual upturn. And here you are, right, with your advanced decline cumulative averages, and they've got that thing, heading back towards highs. So the market breadth to me, right, here's your McClellan oscillator is breaking out, right? If you believe in things that I do, this thing's breaking to new recent highs, right? After we kind of slowed down there for a while. So things are improving there. So there's your new high, new lows. That is not setting the world on fire, but it's been consistently with newer highs, not newer lows. So yeah, I mean, this is what I mean. It's not ideal. You would like to see it with a little more pep in its step, but that is still improvement. And so we may as well finish off that aspect of what we do, because if you look at these sectors now, I'll just make some comments about these. And frankly, right, these got better. Now, they weren't, I was looking at this saying at the end of this week, I'm sorry, on Thursday, I was looking at this saying, yeah, there's a couple things that are kind of bright spots, but really, this was another week, just like with market breadth, it wasn't all that special. But now, if you look at it, the way that they've got things perched, right, everything has a little bit better of a look to it. Energy has a little bit better of a look to it. Leadership sector XLK, right, closed up towards the highs of the week as of today, right? After yesterday, it kind of backed off and sort of fizzled out from the high. So they fixed that for now. This, right, XLC, that got fixed, right? That closed out near the highs of the week. They've got XL. I put a BAC long idea in towards the end of the day. Had to. There was a massive paper, and this thing's closing towards the highs, and it's really close to maybe breaking out with a little bit of more push. It could sort of challenge those highs that it had in there. So, and you've got, I think yields were rising again, sharp reversal yesterday in yields in TNX, and then you had another strong tack on today. So that the financials look solid. Energy looks a little better as far as our triumvirate, right? Here's your XTN. If you would have asked me at the end of yesterday, I would have said I'm a little concerned. This is not behaving well. I can't be completely thrilled, but look how it closed out. I mean, you're recent highs now, thanks to today's save slash shenanigans. So this is what they do. This has been happening, and so your sort of blood flow sectors are saying good things to close the week out. Your leadership sectors are better or solid at the very least to close the week out. Right? Your defensive sectors, they're okay. They're not too bad. Okay, it's just to wrap those up. Nothing special, but nothing bad there. Right? It's not like they're screaming up. XLP, XLY, very similar, right? Where this is a little more defensive, this is a little more offensive. That's a little bit of kind of like if you wanted to try to give this week a bullish grade and you were thinking, should I do, B plus, B minus? If you wanted to kind of say B minus, you cite this. Well, you look at discretionary, it's not doing that great. It should have done better if we were going to be in a B plus mode. So it didn't though, right? But I think XTN sort of popping the way that it did, and then you've got near highs on XLB, although hesitation. And then XLI, this one is also made a new high and closed near the highs for the week. XLU, you could see, right, that kind of got beaten down and never really recovered. Trying to put a little bit of a reversal candle together today. But again, nothing really, I think, special to say there. I will give us the quick view on the TNX. What happened to that? Oh, is it behind here? We move this out of our way. But so yeah, so you may think, well, what about that? The yields are heading back up a little bit. We have to see. Oh, out of habit. I've done it again. My bad. Let me see. CGI. So here's your TNX, right? It really reversed strongly the last couple of days. Now we're heading back up, and to me, right, if with a little bit more push, it becomes a little kind of concerning again that yields might have another run up their sleeve, right, to move higher. Yields may be moving higher. So there is some concern. I did mention that on the slide that you've got some concern in with investment grade ratings a lot. There's been, I guess, a tilt or lean towards more things that are taking on negative ratings, negative bond ratings in that space. Not really what you want to see, but really the equity market, from my experience, is not going to care about that until it has to. Just like bad news and other things, that's not how the equity market functions. The bond market will spot it and react to it probably more quickly, or whatever is going to come of it, it'll be reflected more quickly in the bond market than the stock market. That's been the case as long as I can remember, and people have said that before I even got involved in the business, I'm sure. But that's the way that it's always been, by and large, not every single time, but by and large. So, on that note, let's take a look at one other thing, and that would be Google. So I'm going to note this one. This is another one where you could say, well, what's it got? Is that a cup and handle? Is that an inverted head and shoulders? I think Google looks really primed to go. I think you are maybe just a little bit ways away from taking out highs or whatnot that would really release this stock. Remember the news environment we're in. I just wanted to note that there's been so many things that I have not been able to remember because I'm just in a situation where things are swirling and constantly. And so, yeah, so I can't remember it all. And I just don't have the time to be as methodical, anywhere near the time. Well, no time to be as methodical as I'd like. But this one really is intriguing to me as one of your bigger names. I think I want to say last week we talked about Amazon, which had a good week. I want to say yeah, we did talk about Microsoft. I'm pretty sure. So I hope if I did talk about those, I hope that helped out some folks because we did think those were good names. And obviously, I'm pretty sure we used two of them in Rebel Pit Pro and Rebel Pit Elite, which are momentum-based services. And they could have been flops if we got the market wrong, using the word wrongly, because I don't really look at it as you're wrong. That's, I think, negative for your psyche. I would say that right, that it didn't work out, right? I know it's sort of like a silly thing that it sounds that way, but knowing that you're playing a game that requires a lot of trials over the course of time, you know that they're all not going to work out. So it's just an attempt that didn't work out. If you think of it that way and you don't get down on yourself, I think you'll be happy about that in the long run because you want to stay away from those negative thoughts. But we could have easily been wrong if the way most people say it, if this market would have gotten dealt some rough news. But fortunately, the rough news didn't come until later in the week with the dust up, and that allowed Amazon and Microsoft and some of the other names we looked at to get going, to try to do their thing. Unfortunately, a lot of them did. So that's the quick tour through all the stuff that we usually covered. As I said, I think I mentioned this I put an idea together. I was long GDXJ coming in, and then had GDXJ, and was fortunate enough on this spike when it got above these Bollingers to get out of it. But we did get more paper in the space, and I did add GDXJ. So it has the trigger that you've got to take out. I'm pretty sure I used the high. So I think I may have even put this in there that I'd like to see this thing pull back before it reignites. Like that would be the ideal thing because this got frothy, right? You got overbought technically. You could see it got a little stretched. It would be really nice if it just does a nice little pullback for maybe I'm sorry, the better part of next week, and then starts to reignite because that breakout potential is still there. A lot of that silver, whenever they start getting, crazy about silver, and trust me, I'm a believer in silver. I'm long silver. I'm long physical silver, right? I've got stuff in here and have for a while. I didn't stay as long as in everything as I wanted to. I switched from I'm in different things than I was at one point. Let's put it that way, rather than pure direct silver stuff. But anyway, yeah, this is whenever they get a little, we have an idea in here, and it's good until November because I didn't want to miss the train if this did finally leave the station. But we did have more paper in here. We had more paper in other names as well. So there's still people playing, but the reason I sold was due to short-term stretch. And my plan was if it didn't back off enough, my plan was really to get back in. But I just kind of had that sense that the charts were a little ahead of themselves in GDXJ and here, and that, this is probably going to back up a little bit before they let it go. It does most of the time. That's why I'm saying this. It's just a very frustrating space where, one time if I do that, I'm going to probably regret it because I'm going to have to scramble and pay for higher prices to get my calls back in different things. But, when that time comes, a lot of these things have worked out for me where it gets stretched. I sell and wait and it comes back. Anyway, just wanted to pass that along because I know some of you have been following me and my precious metals longs now for a couple of years. So when the charts really started shaping up. So let's see what we've got left before I cover some of the other things. I might bring back our slide at this point just to make sure we're covering things. And let's get to where I can cover things. So we covered that. So the week ended, even though it was really all about Friday, it ended with greater positivity. I think we've seen that. Just want to make sure the right screen's recording, and it is. I'm still sticking with this news cycle. Well, yeah, the news cycle remains pesky. It's been sloppy, but in the end, right, this is what keeps happening. The bulls continue to win out. So they're they're on a mission. I mentioned this the last couple of weeks, I think, and I can't remember who it was. It was one of the biggest firms you would recognize, one of the recognizable sort of CEOs or whatever, founders, just saying like we push stocks in the directions where we think that they should be, right? So that's one of my things. I've been saying that since I learned the game, literally like back in the 90s, that they push these things where they want them to go to. It's not this pure free market the way that a lot of people think it is without any interference or let's say designs. It's just the way it's just the way that it is to me. And I always thought that, but you could have gotten maybe one or two people in 100 to believe anything like that way back when. It was taken for granted that there was no manipulation. But then it turns out, if you go do your research, you'll find out that most markets have been proven, at least at some times, to be heavily manipulated by certain parties. And you can look across, but somehow people still held out that no, that doesn't happen in the U.S. equity market when much bigger markets get manipulated on a routine base, somewhat of a routine basis. Anyway, that's the soapbox stuff. Um, so the hopium, the rosy lenses, I still think everything's being treated that way. And I think these underweightings, I'm going to just keep hitting on that. That's what's helping to keep this stuff levitated to this point. And even if, even after that Trump Elon dust up and all that, right, they got everything back and then some today, practically. Right. So they might not have made a new high, but got it almost all back. And they've been retaining, right, the consolidations on this bounce or leg higher since the lows have all been relatively mild or shallow, right? And so they're just not letting it get back down. So they're keeping people from getting a deal and forcing them to pay higher prices, which is their MO. So this is just continuing to work. And so, as I say down here, right, once again, it's almost verbatim from last week. absent seriously negative news developments, the path of least resistance remains up. And I think, right, they're trying to set up for an attack. We've said this for a little while on the all-time highs. I mean, I think they're maneuvering towards an attack on the all-time highs. And I think the only thing that's going to stop that will be news developments. That's, and you could say, well, that's always the case. It isn't always the case. Like sometimes you get, double tops, you get lower highs, things like that, and then you roll over. So it's not really always the case, but it is quite a bit, right? And there may be news that follows those things or concurrent with them. I can't say that, but I'm just saying if we look at it objectively, the way this thing's shaping up and the way they keep finding a way, I would just expect them to continue to do that. And I think there's so many charts that are set up with cup and handles, with inverted head and shoulders. Some of these are compound inverted head and shoulders, but there are head and shoulders out there. And these are basic, well, easily spotted patterns. And that's where my warning has to come in because I'm jumping down to this line here. The breakout started, it hasn't been pretty, but these are all over the market. They're inverted, of course, which makes the head and shoulders bullish. The cup and handles are just straightforward cup and handles. They'd be inverted if they were flipped the other way. This pretends bullish action, but the failures can be extremely rough from these things. So you could break through the neckline. You could break through the top of the cup, or you could break through the handle, the resistance at the top of the handle, however you want to chart it. People trade them both ways, whatever you want to do. But remember, if it doesn't fire and continue to go, or you're not seeing the momentum you thought you'd see, that can be dangerous. So you've got to be on alert for that because when they do, failed patterns are just as good to trade, frankly, in my opinion, as ones that do follow through and fulfill their, let's say, pattern destiny. That's my take on it. I've seen even more vicious things happen when patterns fire, fail, and reverse because people are slow to react. They're like, wait, what happened to my beautiful inverted head and shoulders? What the blank is going on here? This isn't supposed to happen. This thing was supposed to go. And it's a deer in the headlights effect. And they just smoke people. And remember that this could happen on news, which makes it even worse because it could be like really swift. Again, this is where your discipline comes in. And it's not always easy, right? It's not always where you get runaway train winners all the time. Everybody sort of knows that without thinking about it, but everyone seems to, when things are working, get lulled into the sense of things are working because they've heard they've got to be patient, which is true. But, right, being patient at the right times is also true. And that is certainly an art form. And I'm not even saying I'm the master of that or anything along those lines. I'm just saying until you really feel like you are in that safer portion of, let's say, to kind of dive into the Elliott, you're in that sort of meat of wave three, or you're at the near, really in like a wave five up. It should be a strong one. It's a lot harder to be right when it's a lot harder for me when you're not making these new highs to be able to do that and be super patient because I mean the administration that we have right now is it. I mean, that's all you need to really think about to just convince yourself that news could hit at any time. Anyway, I mentioned the credit markets. I mentioned, right, that I mentioned this before. I'm still not sure about this because you could have this real situation on your hands where these air pockets come back to really haunt us. I don't want anyone to forget about that. Remember, I haven't been beating a bearish drum here, so I don't think I have. At least that's my perception. I'm just saying you got to not forget about that because, yes, everything's been working out well, and I hope it continues to. But if it doesn't and things really reverse, especially on bad news, this could be down hard and fast, hard and fast. So that's just the way that it is. So that's part of my diligent warning. This was a lackluster week. We covered that until the end. Frankly, there's been little of the way these concrete trade deals. As I've noted last week, the big, beautiful bill, which is not what I would call it, but that's what Trump calls it. I'm still hearing it's going to fail in the Senate and Elon could get his wish. It's not like I'm wired, though. I'm just saying these are people that have been right about other things that are like this, that are not high profile people. So I give them they get a little bit of benefit of the doubt. So I treat it somewhat seriously. Now, I don't know if that undoes things. Maybe it does. I don't know. But I'm just saying, just keep that in mind. We already covered all that, sector and breadth. Yeah, and so we did. There were some positives and negatives to the sector stuff we looked at. So that's that. And by the way, I just trying to make sure I get this done for everybody. I forgot to even get rid of this, so that's my apologies on that messy stuff. These trends we've talked about it all. I'm sorry, sector and breadths are looking better. We talked about how we're really close to going really risk on. You could get a melt up. Don't have it written though, but that's where you're at with the kind of UOA that we're seeing too. And I know that's a dual-edged sword, but I've got to mention it, right? Because it doesn't show up all the time. So I know people hate when you're giving both sides credence, but I mean, I think that's the way you have to be because you don't want to get locked into a certain way of thinking, have the market change, and you just deer in the headlights. One of my major things I harp on that everyone's heard too many times. Anyway, these are still up. I still think you have to remain objectively bullish, right? Until this point, you have to remain objectively bullish. If we don't get news, I've already said, I think it keeps going. They try to attack the all-time highs. This was a weak bust out. Last week we were saying still no bust out. The bust out we thought could happen this week. They got it started, dust up, reversed it, but they saved it on Friday. So this is not normally good that you've had this, but what you could get is a little bit more back and fill because this is weak, and then you could uh, you could come back a little bit, and then you have I think you've got CPI. I think is it PPI, CPI, and then consumer sentiment, or do you have I can't remember if it's what's first. Is it no, it might be yeah, it might be PPI. No, I think it's this at least this week. I think I remember seeing it was CPI, then PPI, and then consumer sentiment. I think those are Wednesday. I think I've got that up here. Yeah, I've got it up here, and I'm forgetting it right because I'm just trying to get this done for everybody. But yeah, so that sets up where Monday and Tuesday might not be heavy news days if Trump just enjoys the weekend, maybe plays some golf, and we don't get anything that really smashes the news tickers again. And so you might get this like, okay, it was a lackluster breakout, and then they kind of use that lacklusterness to kind of back things up a little bit, maybe. And then, right, they use those big numbers like they did at the end of this week to move things up aggressively if there's no news, right? That would be one way to look at it. Some people might say, well, they're going to keep pushing it and they're going to then back it up on those to then back and fill it when those numbers come out. And then they're going to keep going, the next week, the third week in June. Could be, it's tough. Those little things are tough to call. That's why you got to just go with the flow and adjust accordingly. Again, another one of my mantras, but I don't know. I really don't know a better way to do it after all these years. Anyway, you got the news wild card. The Spidey sense is still there, as I noted though last time. It's kind of like a faint or just a little bit more than a faint Spidey sense for me right now. That there's some things lurking out there, not the dust up thing, but something other things that could hit the market quickly like that. I don't think that's a revelation, like given given Trump and how he is, for better or for worse just the way that it is. So yeah, so I think right if again I would just summarize by saying if Trump goes easy on us news wise, I think they're going to try to work this stuff up, and we now will finish up with just a wrap on where you go to. And I think right your support is clear. You may as well get if you're going to follow some of the videos, and these are very helpful. I find right where they're not my thing, and I'm not the biggest devotee to these, but right? You're rising 10, 15, 20. Should the market fall apart quickly, that's where you would expect it to be caught. You're above all your longer term SMAs. They're all pretty much upsloping. So in a rising market like this, these should really hold the market unless the news is just devastating. And again, this could be seen, right? If you do reverse, this could be seen as a false breakout, right? You close up here, right above this level we were talking about. You effectively do get your bust out. Now it looks like a breakout, but they could just yank it back down on people right away. But if it does find support there, I would think they're going to try to use that back half of the week news. And they are, I mean, if they don't back up too much, I could definitely see them moving this thing up towards the all-time high. And that would be my take on it, right? If I had to speculate as to how it's going to be done. So you've got basically, I would say 611. They might stop a little shy or 613-ish. And then you can look at your SMAs here yourself, your 10, your 15, and your 20 in white, red, and light blue or cyan blue, respectively, are all right there, right? So they're down about anywhere between 1.5 to 2%. The Qs right there are not far from the all-time high. You're 2% there. You did have a breakout there. They even came back really, depending on where you want to mark the breakout, they came back, tested, I think, a flat line there that was pretty big deal at 523-ish. The 10-day was right there. The low that day was about 2 points above the 10-day in white. So they held it above there. Today's shady little recovery, which has become commonplace. They're all rising SMAs, right? If you wanted same thing, right? You're going to use your SMAs for support. I could find other flat lines, for folks that are in services or whatnot that need those. Ryan does that all the time. We can, if you need the flat lines, but I'll throw one out and just say I think maybe like your 515 level is probably another area you could say, yeah, that matters too, which is a little bit below your 20, but that would be about down about 3%. So upside is going to be attacking essentially right near 540. That would be my number. Um, let's do diamonds and then we'll do IWM to wrap up. Diamonds another clear breakout, right? You get above this high, you might even have a new closing high versus there. Let's see, 28.38 versus 28. No, you're kidding. 2804. Yeah, so a new closing high, barely. So yeah, so a little bit better, breaking above the 150 there in Rust, the final SMA. And right, you've got the kind of inverted pattern there. It's really right near the neckline and should be close to firing and could go. And again, where they're going to take that to, let's see. 451 is the all-time high. That is lagging behind, quite a bit more. So you can't really, for this week, I don't think you can really work with that. That would be really a super stellar week of about, what would that be, about 4%. That's a really big week. I would look at 433.48 or 433.50. That would be one level. And another level is going to be probably right near there, and that's going to be your 439. So that would be again another 2%. That's where the resistance comes in at just the next few levels. And again, I would use your SMAs on the downside here, right? And I think your 100, you got your 200 there in purple, you've got your 100, your 20, your 15, your 10, right? They're all there. You as a bull, there's even a support line there. So as a bull, you really don't want to see the 20 SMA get cracked because, well, let's make it the 100 SMA get cracked because that's a slightly lower. But 20 and 100 are 422.70 something. So yeah, you want to see it hold above there. Otherwise, you're probably inviting more downside and you're looking at let's call it 419-ish would probably be something to respect. And then right near there's going to be another one, I think right near there at four. Yeah, so 418, 419 is your next ballpark. That's probably your real like uh-oh, because if that fails, 418 fails, then you're looking at, possibly testing your 50. So there's the levels on that one for this week. And then finally IWM. Again, this is one of my favorites to trade. The premium in here is very reasonable at times. Volatility is, I don't have it on this chart. I try to take things away so it's not too busy. And but volatility is probably in. In fact, let's take a quick glance at the VIX and come back here. The VIX is making, new recent lows. You've got to really go back to the winter time when everything was wonderful. And it was up and away to really reach this level. So the VIX is really smacked hard. It fell below our 18 and a half level. And now I think you're going to be inviting, 15 is going to be the next level, big level I would look for on the downside there. But you could see the vols certainly a lot cheaper than it was. And the IWM um, probably has cheap vol as well. I'm not going to go into that, but this is a breakout. There's been a lot of fits and starts in this. You can get seriously tough times. This can be a little squirrely at times. But you can see my resistance line that I've got drawn there in orange, blue through there. That really dovetails with the 100. Right through there. Your next targets are the 150 and 200. I mean, they really have to be. and they're right near 215, which is a little bit about, I guess, 1.5% up. So that'll be a big test. But there's sort of that inverted we talked about. It's getting through resistance. I think that, well, actually, my line looks like it moved a little bit. I don't leave lines off like that, so I don't know what happened there. Kind of weird. But anyway, that's breaking out. That is breaking out. And I think that looks good. And I think that portends good things for the market. But this has been very disappointing when we've tried to get excited and look for more. Yeah, there's been times where it's worked out nicely, but there's also been times where it's been really frustrating and just couldn't go. But look, this is I think it's an overall, it's a good development. And really, the breakdown to me happened right about here. So I'm going to put the breakdown at about 224. And as I've said in many of these videos over the course of time, right, a lot of times you'll return to the scene of the breakdown. In other words, the breakdown level where things really started to accelerate, broke down and started to accelerate on the downside. Some of you may prefer just to use the 150 on that date, and I'm going to ballpark that at 222, let's say, but I think 224 is, what I would really use the way that I do things. I don't even want to get into it. It's such a minor thing. It just, your little peculiarities that you kind of cling to from having seen one work better than another. So I don't have numbers on that, by the way, to say here's why, just my recollection. But anyway, that's that. So I think it's going to come down to where that broke down from. It'll come up to that, I should say, if they can pull off that scenario. So I think that means there's a nice upside in this thing if we get this bullish scenario, if the news cycle allows for that. And I think things are setting up that way. So I would lean that way and then adjust to the news bombs. That would be my way of approaching it. And as long as this paper remains as bullish as it's been and these charts keep giving us the bullish feedback, we're just, as always, we're just going to keep going with it. Even if, right, we have qualms about this, that, or the other thing, these guys keep finding a way to win out. The whole system is kind of rigged that way and geared that way. And so we've got to do that. So um, I've got to wrap this up. So I'm getting peppered with phone calls, but I was at the end anyway. So I'm going to wish everyone a wonderful weekend. I hope this gets out early so you can watch it quickly. And I'm going to say that I hope this helps you out next week or some week in the future. And at some point, maybe I can start to do this the way I want, but I'm just doing the best I can as of right now. So I hope it's helping out, and everybody take care and thanks for tuning in.